morning and how do you do, ladies and gentlemen. I'm your host, Seth Julian, and we're going to look at the major hydrocarbons today. I've had a lot of questions from a number of clients, or actually a number of questions from a lot of clients is really what I wanted to say, about what's going on in the oil markets. This is WTI, U.S. benchmark. It's largely the same for the Brent. It's approximately the same. At a slightly higher scale. This is a 77 handle, and the Brent has a 85 handle. But generally speaking, it tracks the same pattern. The question is, what the hell's going on? Oil price hit its high in March of this year. It came in a 120, a 121 handle, and now it's down to it's 78. Let's call it $78. Where do we think oil's going? Well, if you look at the Commitment of Traders report, the large speculators are net long. That means that they think it's going to go up. And the small and the commercial nets are net down, so they think it's also going to go up. So that's what that indicates. Again, this is not a highly reliable indicator. I just put it on there because we've been talking about this in a number of our webinar sessions. But the Commitment of Traders report is of marginal use. It's just there for instructional purposes. What we need to understand in oil, of course, as always, is OPEC and the fundamentals. And the fundamentals are quite weak for oil. Most of Russian Federation hydrocarbons have been redirected from the west, i.e. Europe, to the east. They're flowing into India and China at a deep discount. Depending on what brand, most of the Ural grades are selling at a 40% discount all over Europe. So that means that the hydrocarbon flow is in flux, and what we have, and this is what I want to show you in the next chart, this is natural gas. Now this is the U.S. contract to be sure, but we are seeing remember this is, from this low here, again, the beginning of the year, to here is, well, I'll tell you exactly what kind of uptick it is. We'll call this low from about here, I guess. It's good enough. That's an 83.69% rise in oil, and that discounts its high, which hit 150. So 85%. Remarkable rise in the price of natural gas. So we expect this to continue. Natural gas is likely to continue going up. Oil is likely to continue falling. That's our take on the hydrocarbons. And when I say likely, we're talking, in the case of oil, at least out 6 months, because the economics for oil demand are weakening as the recession all over the Western world takes further and deeper hold. The demand for transportation will fall, so we expect crude oil prices to fall. And as natural gas becomes scarce in Euroland, we expect this to go up and likely be pressing to penetrate these levels again, the 9 handle once again, and we see that happening within 2 months. So that's our take, ladies and gentlemen. Natural gas up, oil down. I'm your host, Seth Julian, wishing you all the ability to trade with confidence. Bye-bye for now.